In this video, I'm going to explain a simple swing points trading strategy. Now, let's see what are the swing points. So swing point is a turning point of the price to either create a pullback or reverse the trend. So it can be a point where price just creates a pullback, or price where reverse and it creates a new trend. So basically, we have two types of swing point. We have a minor swing points, which are the one that creates minor pullbacks, and then we have major swing points, which creates reversal and initiate a new trend. Let's go to see on the chart. So these are the live example of swing points, and I am using volatility 75 indices to explain this swing point strategy. This works in all instruments, whether currencies, indices, commodities, all instrument member price actions in the same throughout all instruments. So in this particular video, I'm going to use volatility 75 indices as example to explain the swing point strategy. So as you can see here, the ones I've marked with the yellow boxes, those are the major swing points, the one that have resulted into a considerable reversal of the reversal and initiate a new trend. And the one that I've marked with the green boxes, those are the minor swing points that has resulted just into minor pullbacks. So as you can see, we have this one here, which was the major swing point. Previously, price was in this downtrend here. You can see price was in this uptrend, sorry. And then after this point, price dropped and managed to reverse the trend to downtrend. So this particular swing point here is the major swing points because it resulted into reversal and created a new temporary trend here. You can see price was in bullish, then the price after this swing point, price continued to drop and it started a new trend. Same thing for this another one here. You can see also it's a major point here. Price was in this uptrend here, then the price after this swing point, price started to drop and created a downtrend. The same thing here, price was in the uptrend, then after this swing point, price started to drop. So the major swing points are the one that creates reversal and initiate new trend. Here it can be a short-term trend or a long-term trend, but as long as it results into shift of the trend and initiates a new trend, that's we term it as a major swing point. And as you can see, as soon as price reacts to a major swing point, there's a high chance for price to reverse. As you can see, what happens when the price came to this major swing point here, price dropped very sharp to the downward here. The same scenario for this one here. We had a major swing point here below. When the price touched this major swing point, price went up to touch this level. The same scenario here. When the price comes to this major swing point, price drops. So the major swing points, these are the one that results into a new trend and reversal, and they work very perfect. So how do we trade these swing points? It's very simple. Since these levels are very strong, because they are the points where a new trend started, so there is a high chance for price to respect those levels when the price comes to hit the levels again. So what we do is after sorry. So what we do is we identify the key levels. We identify those swing points in our chart, because we want to know what are the swing points in that chart. So after you've identified the trend, now identify the swing points, the points that resulted into reversal. Identify the major swing point first, because those are the ones that resulted into reversal and initiates a new trend. So for this scenario, we see this was our swing point here. Let me mark it as yellow. So this was our swing point here, which resulted into a shift of the trend because we were in the uptrend, then the price dropped. So this swing point here, this high, which is our swing point, this is where this new downtrend here started. So we're going to mark this swing point as the key level. So when the price comes to retest our swing point, there is a high chance for price to respect and drop from here. So we're going to take our trade when the price comes to our swing point. The same scenario for this point here. This price was in a downtrend, and now price started to shift and went to uptrend. So what is the swing point that resulted into shifting of this trend? Now we know that here, down here, we have a swing point, which is which resulted into a shift of this trend. So in this particular area, this is where we'll be looking to take the trades, and when the price comes back here, this is where we'll be looking to take our buy trades. So how do we actually take trades on swing points, and how do we know that this swing point is going to be valid or it's going to be broken? That's where the most important point is, knowing if this swing point will hold the price or if this swing point will be broken. So I'll cover that in the next video. Please subscribe to my YouTube channel, and you can follow my my social media handles, Instagram at the Market Wolf, and stay tuned because the next video is coming and I will explain all those concepts, how to know the valid swing points, how to take entries on swing points, and how to identify the fake swing points.